Hello, everybody. Happy Thursday. Welcome to our live. I just realized I didn't turn my light on. So yeah, we're going to do that. Just add a little color to my face. All right. Hey, everybody. Super excited for today's. These used to be Tip Tuesdays. I guess we're now calling them Tip Thursdays. We're going to be doing these every Thursday here. If you're here in the Facebook group and the free Facebook group Badass Moneymakers, or if you're just watching on our page, on our Facebook page, you'll find us here also on our YouTube channel. So welcome. And today we have a really, I was about to say cool, and then I realized no one's going to agree with me on this, really important topic, which is one that I have been seeing people freak out about a lot, especially in communities where folks are makers or they're selling things online. This is a topic that folks are really freaking out about. Before I dive in, though, let me know if you are here live. Let me know who's watching us. And right above my head, if you're on Facebook, you'll see something that says I'm going live using StreamYard. There's a link. Please click that link so that I can see who you are, because otherwise, if you comment, I can't see who's here. All right, our topic for today is all about the 1099 reporting rules changes. And if you're not sure what 1099s are, we're going to talk about that, so don't worry. If you know exactly what they are and you're here because you've been feeling a sense of panic hearing about these changes, I am going to hopefully set you at ease over the next 20 minutes or so. So let's go ahead and dive in. I've got some slides, as always, although there we go. Hold on, I got to share. I never do this as smoothly as I feel like I could do it. We're going to figure it out. Let's see if we can actually present so it's not ugly. Oh, you know what, though? Every time I do that, hold on. Oh my gosh, the tech today. I act like I haven't done this in a year. Kind of feels like I haven't. It's been a while. I know what I'm going to do so that this is easier. Bear with me one second. As a reminder for folks who are watching live, right after this, so this is new, right after this, I am going to be doing inside the free Facebook group, the Badass Moneymakers, I am going to be doing our monthly Q&A. So if you're here watching on the Facebook page or on the YouTube channel, head on over to megkwheeler.com/group, and I will be doing our Q&A over there right after we get through this Tip Thursday. Assuming we can get through this Tip Thursday, assuming I can figure out my tech, which I think I can. Because I am pretty smart like that. So bear with me one second here. Oh, lordy lord. Okay. Oh my gosh, give me a second. We are just going to do it this way. Everything has changed, I feel like, on the on my computer, and so now I just don't have any clue how to do anything. But it's fine. We've got it. Live streaming is not what I'm an expert in. I'm an expert in taxes, not live streaming. Taxes. Okay, we're going to just do this old school. It's a PDF. It's not pretty, but it's going to work. All right, and y'all are going to see all the tabs I have open, and I don't care. Cool. So how the 1099 reporting rules changes affect you. Again, if you have no clue what I'm talking about, I'm going to explain what I'm talking about, so don't worry. But let's go ahead and dive in. So a little refresher. When I say Form 1099, when I talk about a Form 1099, I am talking about the form that reports non-salary income to the IRS. So there are many types of 1099s. The most common is the 1099 NEC. This is the most recent form. They just changed it last year. Used to be the 1099 MIS, M-I-S-C, miscellaneous. And it's generally used to report contractor income or freelance income. So really, anytime you get paid for services that are not done as an employee, you're going to get a 1099. There are also other types of 1099s, like the 1099 INT is for interest income. The 1099 div is for dividend income. What else is there? There's the 1099C, which is for cancellation of debt. We're not really talking about those today because this reporting change doesn't affect those. We're talking about the 1099 NEC, used to be the 1099 MISC, which reports that non-salary income, any money you get paid for services to the IRS. So generally, this form is required if the person who issues it is the person who's paying for those services. So generally, this form is required if you pay an independent contractor, what we refer to as an IC a lot, more than $600 in 1 year. So you've got to pay them more than $600 in 1 year for services they perform for business purposes. So we're not talking about, you hire a landscaper for your house. We're talking about you have a business. They are providing a service to your business. You pay them more than $600. You're going to have to give them and also file with the IRS the Form 1099 NEC at the end of the year. It gets filed in January for the previous calendar year. Now, there is one really big exception, and this really big exception is what the whole reporting change is about. So we're going to talk about this exception and then explain what the actual reporting change is and why it might affect you. So generally speaking, this big exception is that Form 1099 NEC is not required, does not have to be issued if you hire someone and pay them for services for your business through a freelance marketplace like Upwork or Fiverr, or make the payment to this person through what we call like a third-party payment processor. So this could be a credit card, a debit card, a payment processing site like PayPal or Stripe or Square. If either of these things is true, in theory, you don't have to issue them a Form 1099 NEC. And the reason that you don't have to do that, excuse me, is because they will receive a Form 1099K. Form 1099K is basically the exact same thing as a Form 1099 NEC, except it gets issued by a third-party payment processing entity. Okay, so again, this would be a credit card. This would be a processing site like Stripe or PayPal. Upwork and Fiverr fall into that category because the payments for jobs that you hire people for on Upwork and Fiverr get processed through their own system. So in this case, if this person received payments through one of those methods I talked about, provided they meet the minimum reporting thresholds, which we'll talk about in a second, they would have received a Form 1099K from that third-party payment processing entity. So you would not have to give them a 1099 NEC. Before the reporting change, this minimum reporting threshold was gross payments that exceed $20,000 and more than 200 transactions. So if you were paying a contractor through Stripe, let's just say, or Square, whatever, you wouldn't have to issue a 1099 NEC, and that person would only receive a 1099K if they received, not just from you, but in entirety on that platform, on Square, if they received $20,000 at least and had at least more than 200 transactions. As you might imagine, this minimum reporting threshold, meant that a lot of people were getting money on these platforms and weren't getting a Form 1099K. Okay, that's part of why there's been a change. So what is the tax law change? The tax law reporting change is that beginning in 2022, any users of third-party payment processors, so Venmo, PayPal, Cash App, Stripe, Square, credit cards, like all of the ones I've mentioned, Upwork, Fiverr, all of the ones I've mentioned, will now receive Form 1099K if they have transactions over $600. So that $20,000 minimum reporting threshold has gone away. The 200 transaction minimum threshold gone away. Now the only minimum reporting threshold is $600. Now, if you're someone who's paying people for services related to your business on these types of sites, you don't have to worry about anything. The exception still stands that you don't have to issue them a Form 1099 NEC because they fall under the 1099K rules. This is only going to change if you are receiving money through these platforms, because now you will get a 1099K if you receive at least $600 on these platforms, and it's per platform, by the way. So $600 on Square, $600 on Upwork, so on and so on. Whereas in the past, you would only have gotten a 1099K if you were above that threshold of $20,000 and at least 200 transactions. Hopefully that makes sense so far. I want to make sure if you've got questions, put them in the comments. Happy to answer questions as I go along, because I know this is a lot of information. Now, this is the part at which people start to panic, because they start to think this through and go, well, hold on a second. That feels like that reporting threshold has really changed. And it has. It's changed quite a bit. And now a lot more people are going to receive the Form 1099Ks than would have in the past. So what I've been hearing a lot from folks is this collective panic of, well, now does this mean I'm going to have to pay more tax, or I'm going to get taxed on more things, or like, people's minds explode, right? So let's talk about some of the concerns with this new law and why they're not actually really concerns, but I'll explain all of those. So the first question I've been hearing a lot around this reporting change is, does this mean I'll have to pay taxes now on income that I wouldn't have had to pay taxes on before? And the answer to that is no. So this new requirement does not change what is subject to income tax. This new requirement only applies to payments for goods and services that would normally be reported to the IRS anyway. It literally does not change what's subject to tax. It just lowers the threshold for the payment entity to give you a form showing you how much you received. I'm going to say this probably multiple times here today, but whether or not you received a 1099 form now or in the past did not change whether or not income was subject to tax. So if you sold $300 or you sold services of $300 and got paid on one of these platforms and didn't receive a 1099K in the past, you still had to report that income. This is one of the biggest misconceptions I hear is folks will say, well, I didn't report it because I didn't receive the form. Not how it works. If you earn taxable income, you've got to report it whether or not you get a form. So this is not going to change that. It's just going to mean that more people are going to get a 1099K than did before, but you still have to report that income. Now, another question I hear a lot of is, well, then what exactly was the purpose of this law change then? If it just doesn't change what is subject to tax, why did they even change this reporting requirement? And the answer to this one is because this helps get more transparent and honest reporting. So remember that threshold I talked about before, that minimum reporting threshold of $20,000 and 200 or more transactions. That's a pretty high threshold. A lot of folks making money in the online world would fall under those thresholds. But the IRS wants to make sure that money that you're getting paid is still getting reported to them. So by lowering the threshold for a 1099K to be sent to you and the IRS, the forms get sent to the IRS as well, they're making sure that there is more transparent and honest reporting, that all of these income amounts received are in fact getting reported to them and then also put on your tax returns. That's that second bullet point about there. Make sure all taxable income is reported, right? This has been a huge problem. In fact, I saw a data point recently that said something like 80% of, it was 80 or 85% of all gig workers. So, thinking about like Uber drivers and freelancers and people on Etsy and stuff like that, 80 to 85% of all of those folks were not receiving any kind of documentation about the money they were making on these platforms. Now, and I'm not trying to knock those folks, but that meant that a pretty big number of those people were also not reporting that income on their tax returns. Some of those folks intentionally weren't reporting it, and many just weren't reporting it because they understandably thought that they only needed to report it if they got a form, which, as I've already said, is not true, but that's what people were thinking, right? So this is really going to make sure that all taxable income is reported. Now, you may be sitting there thinking, well, that kind of sucks. This feels like this is just another way for the IRS to get money from us. And you're right, it is going to help the IRS get more money, which I will remind everyone that money then goes to support our schools and our roads and our healthcare and all of that. But it's actually got another benefit to it that people aren't talking about as much as they should be, which is in order for Congress to implement programs that help gig workers and freelance workers, they need to understand how many of us there are out there. They need to understand how much money we're making. They need to understand how that whole system works. And when I'm talking about a gig worker or a freelance worker, again, I'm talking about the person who's selling their stuff on Etsy, I'm talking about the person who's driving for Uber, I'm talking about the person who is doing graphic design or social media coordination or whatever, all of these independent contractors. In order for Congress to actually implement programs that help all of us, they need to understand what that industry looks like. And they can't do that right now because we know that a massive amount of the income in that industry is not reported. which also means that we're underreporting the number of people who are working in this type of workspace, in this type of industry. And so by doing this, by changing the reporting requirements so that more people's income is getting reported, they are able to then have better data so that they can go out and put programs in place to better support the freelance, the gig economy. So there is an upside to this as well, even though for some people it may mean, yes, you have to actually start reporting income that you weren't reporting before. But again, if you weren't reporting that income before, that wasn't like you were following the law. You were just not reporting income you should have been reporting. So again, to be clear, this reporting change does not change the income that was subject to tax. It just changes what income gets reported to the IRS on your behalf. So another question I've been getting, this is a big one, is does this mean I'll have to pay tax on the entire amount that I receive via these apps? And the answer to this is probably not. Let's just say you sell stuff on Etsy. Let's say you sell, I don't know, koozies on Etsy, and you make $1,000 on Etsy. Etsy is going to submit, they're going to send you a form 1099-K, and they're also going to send it to the IRS, and it's going to say you made $1,000 on Etsy. But you're not going to get taxed on the full $1,000 because in order to make those koozies, you probably had to pay for supplies and materials. You might have had to pay for shipping. You might have had to pay for, an email address. You might have had to pay for like all these other business expenses. So don't forget about the fact that much like in a regular business, you get to take those deductions off of your business income on your tax return. So just because Etsy tells IRS you made $1,000 does not mean you're going to get taxed on $1,000. You're going to report that $1,000 on your tax return, and then you're going to report any allowed business expenses to offset that income. Now, another question I get, kind of as a similar question to the one that was just asked, is, well, what about all the personal stuff I do on these platforms? So what if I sell stuff, out of my garage and get paid for it via Venmo? Or, what if I get reimbursed, for stuff? Well, will I get taxed on that kind of stuff under this law change? And the answer is probably not. So if you are digging through your garage, cleaning stuff out, and you decide to sell your old sports equipment on, on a yard sale site or whatever, and somebody Venmos you the money, first of all, that's a personal transaction. It's not a business transaction. Unless you're in the business of selling sporting equipment, it's not a business transaction. So right there, it's not going to get picked up by the 1099-K rules. But also, even if for some reason it did, let's say you sell an old hockey stick for $20. You probably paid more than $20 for that hockey stick. Let's say you paid $50 for that hockey stick. So technically, you are at a loss in that transaction because you paid $50 and you sold it for $20, meaning you're down, you're negative $30. Therefore, there is no gain to be taxed on. It would be different if you bought the hockey stick for $20 and sold it for $50. Now you have a $30 gain that would potentially be subject to tax. But for most of the stuff you're digging out of your garage, I'm guessing that you probably aren't making any money on it because what you pay for it is a lot more than what you're selling it for. So a follow-up question to this is, let me actually, before I dive to this one, follow-up question to this is, okay, well, what about like those reimbursement type stuff? I take a buddy out for we go out to dinner and I pay for the whole meal and then they kick me back some money. Or I live with a roommate. So, they send me their portion of the rent every single month. Usually it's via Venmo, but whatever, however you do it. What about that? Will that get included in this? And the answer is no, because again, those are personal transactions. They're not business transactions. So the purpose of these 1099-K reporting rules always has been and continues to be that these are only for transactions for goods or services related to your business, not personal stuff at all. So I'm seeing a lot of people freaking out on social media saying, oh my goodness, I'm going to start having to pay tax on my rent, my roommate's rent payments. No, you're not. Okay. Those are personal transactions. Now, a question I do get that usually comes right after that conversation is, well, but how are they going to know? How is Venmo going to know that these are personal transactions? And then what do I do if I get a 1099-K for amounts that are personal transactions that shouldn't be taxable? So a couple of answers to this, a couple of thoughts on this. The first is, in terms of how will they know, it's a great question. And I will be completely honest with you, we're going to have to see exactly how this gets handled. Now, on sites like Stripe or Square or Upwork or Fiverr, sites that are specifically implemented and designed for paying for business, or Etsy, paying for business services or goods, on those platforms, the platform most likely is going to take the position that anything you're doing on their platform is for business, because those platforms exist solely for that purpose. They are not meant to transfer funds for personal purposes. So if you're doing anything on those sites, they're probably going to take the position that all of that money gets counted towards the $600 because they are designed to be for businesses. If it's something like Venmo, and by the way, Venmo now has Venmo for Business, which if you are using Venmo, you need to be using Venmo for Business, because using regular Venmo for business purposes goes against their terms of service and you could lose your account. So for something like Venmo for Business, again, I think they're going to take the position that if you're using Venmo for business, it's a business thing and it counts towards the $600 because you shouldn't be using Venmo for business for personal purposes. On the flip side, if you're using regular Venmo for business, which again, please don't do, you shouldn't be doing, but I know a lot of people do. So if you are currently doing that, it's an open question as to how they'll handle it. Will they take the position that everything on regular Venmo is personal because you're not supposed to be using it for business? Maybe. Will they ramp up their audit of people's personal Venmo accounts to make sure they're not being used for business? Probably. So it's an open question, but I wouldn't use regular Venmo to try to get around these reporting rules. I don't think that's going to work out well for you in the end. Now, the other thing I want to say to the second part of that question about, well, what if I receive a Form 1099-K and it does include money that was for personal purposes? The answer is you never have to pay tax on money received that isn't income. So, excuse me, if you receive a 1099-K and inadvertently the $1,000 for your roommate's rent is on there, you don't have to report that on your tax return. You shouldn't report that on your tax return. It's not income. However, what will likely happen is the IRS will send you a notice that says we received a 1099-K saying you made $1,000. We noticed that this $1,000 is not reported on your tax return. Please pay this amount of money for the tax on that $1,000, or, and this is the important part, tell us why that wasn't income. You will then respond to that notice. Well, first of all, you'll take a deep breath because getting a notice from the IRS is not the end of the world. Then you will respond to that notice and say, thank you for asking. Let me tell you why that $1,000 is not taxable income. It's because this is money my roommate paid me for my rent, and et cetera, et cetera, et cetera. So that is that bottom line answer. You do not have to pay tax on money received that isn't income, but there might be some follow-up you have to do if something was misclassified and therefore inadvertently reported to the IRS. The IRS is probably going to ask about it. Cool. All right. I want to make sure I haven't seen any questions come through yet. I'm checking over here on Facebook. We're good. And I don't see anything on YouTube yet. So let me know for folks watching live if you have any questions, but hopefully this is straightforward enough, makes some sense. Before I wrap it up, the last thing I want to say on this is a lot of people are really freaking out about these changes unnecessarily. The only real consequence of these changes is that more people are going to receive the Form 1099-Ks than did before. But I'm going to go back to the point I made at the beginning of this. That shouldn't matter to you if you are correctly reporting your income. Because whether or not you receive a tax form for something, if you earned money, if you earned income that is subject to tax, it is subject to tax whether or not you receive a form for it. So I don't want you to rely on these forms to determine what you owe tax on. In fact, what I want you to do is to track your income separately. I want you to track your own numbers, ideally in an accounting system, but if not, that's okay. You know, everybody starts at where you're at. But I want you to be tracking those numbers so that when you get that Form 1099-K or 1099 NEC, you know, whatever it is, you're not relying on that number, but instead you're going to your own records and saying, this is what I show I made. This is what the form shows I made. Okay, great. They're the same. And if they're not the same, that's okay. It may be that the company made a mistake that issued the form 1099, or it may just be that something inadvertently got put in there that isn't taxable income. Okay. Ultimately, your records are what should matter when we're thinking about this. Cool. All right, friends, I am going to leave it there. Before I hop off, I want to remind you, or actually not remind you, but tell you, we have shut down, officially closed the doors for our 2021 tax prep package. That does not mean that we can't help you if you need help with 2021 taxes, but it does mean that the annual package is closed for 2021. If you need 2021 tax prep help, we will be opening the doors to that in December, in fact, December 1st. But we will also be opening the doors on December 1st for our 2022 annual tax prep package. This is where you get everything. You get full support for the entire 2022 tax year. We do your 2022 annual taxes. We do your 2022 quarterly tax calculations. If you're not already doing those, you probably should be. You get the 4 quarterly tax planning calls. You get ongoing tax support to ask me questions, unlimited for the entire year, and actually through April 30th, 2023. You get the cash flow tracker, the budget tracker, the profit calculator, the money meetings toolkit. You get all of my favorite biz money tools, and you get access to my membership, Badass Moneymakers, through April 30th, 2023. We are opening up spots for this on December 1st, and I will tell you, if you are on our wait list, we always offer a super special treat and a discount to folks who are on our wait list. So you can join that wait list by going to megkwheeler.com/tax. And otherwise, if you are interested in our regular monthly Q&A, join me in 1 minute over in the free Facebook group, the Badass Moneymakers, for that Q&A. I do it once a month. I've got some great business questions lined up for you today. You can join that by going to megkwheeler.com/group. Otherwise, I will see you back here next Thursday for another Tip Thursday. Bye for now.